Sprint stock has more than doubled since the beginning of the year, outperforming Apple this year. How have you achieved that in what is basically a stagnant economy?
Well, I think we're fortunate in the wireless industry in that we are relatively immune from economic fluctuations, not completely, because everybody's still going to buy their wireless device. So if you take a look at the last couple of years, ARPU in the industry has been going up, average revenue per user. More and more customers are buying smartphones, even though they tend to be more expensive than what we call feature phones. So consumers are not buying other things and continuing to buy wireless. So first of all, from an industry perspective, I think we're in good industry to deal with a tough economy. We do see some mix shifts, and one of the reasons we moved heavily into prepaid a few years ago is because when the economy declines, prepaid becomes a more important part of the overall revenue streams in wireless. And prepaid is a customer perhaps with not the best credit rating, because in the postpaid, the contract world, a lot of people don't realize that device costs us, the carrier, many times what we sell it for. So we're giving you a loan, so it's like a mortgage, 24 easy payments, that's your 2-year contract. In prepaid, they're not subsidized very much, but the customer can kind of do whatever they want. As a result, your credit score is not quite as important. But I think what we've been able to do this year is we've delivered a couple of good performance quarters and taken some of the risk that people were associating with the stock. We have had a kind of a long turnaround. We had kind of the first phase of the turnaround was 2008 through 11, and at the end of 2011, their stock took a dive, if you will, or went down fairly considerably when we announced 2 simultaneous major investments that we thought we needed to make to compete. One was a $10 billion investment in our network called Network Vision, and the other was a $15.5 billion minimum commitment to the iPhone over the next 4 years. And doing those simultaneously, a lot of investors were concerned that we could generate the cash from an operating perspective, enough to sustain those big 2 investments. And I think based upon our performance, in the first half of this year, that risk is being mitigated, and we're seeing it reflected in the stock price.
It sounds as if the Apple investment is going very well. Based on what I've seen, it appears that the number of phones you've activated so far have got you ahead of the game on that commitment you've made to Apple.
Yeah, we're well ahead right now of our, we'll call it, if you just were to straight line the commitment over the 4 years. But perhaps most importantly from a financial perspective is 4 out of every 10 iPhones we've sold is to a new customer, which means it brings in new revenue to the company. And that has made a big difference in terms of the way we look at the profitability of the iPhone decision.
Right. And I would presume that the big investment in the network would be mandatory if you want to compete in a world, especially a world with 2 great big competitors, AT&T and Verizon. You've got to make these investments, even though they are many billions of dollars.
Absolutely. I mean, there's 3 kind of what we call table stakes issues in our industry that you have to compete on. One is customer service. The second is the network, and the third is devices. So, customer service is something we really focused on in the first 4 years of the turnaround of the company. And this investment phase was to get our network competitive, because you're right, Verizon, AT&T have invested a lot in a technology called 4G LTE, which we are doing right now as well. And we were missing the iPhone, which was a very desirable device for a large segment of the American population, so we needed to carry that as well.